I've just received some breaking news, and I'm going to read it in as best a form as I can. Jill Marcus at the MPC meeting, who says, given due regard of notwithstanding the prevailing interest rate regime in our global counterparts, the august meeting at the Ruda conference in Cape Town gave us advice not to put rates up, so with deference to them, they are on hold. All right. Kim, can I ask your help? Can I get a microphone? Thank you. This, I think we've got two microphones, Kim. If I can get one to my panelists, and then one can be the roaming. Ladies and gentlemen, this is Kim. The Wealth Migrate forms that you have, if you can give them to the young lady. Just the forms, not your number. Just the forms. All right, this is the money shot. We've been in this room all day. We've heard the speakers present their theses and what's in their minds. We would love to hear what's in your minds. Comments, queries, suggestions, antitheses for the gentleman up there. Do we have a question from the floor? Thesis, antithesis, synthesis. The young lady in the front.
Hi, Edwin. Yeah, I was just thinking you showed that graph of residential property that showed reasonable growth for 2 years, and then it seemed to fall down to about 5% and then stick at that level. Why, when it's sort of reached a certain level, do you expect it to drop back?
I forgot to allude to that. Over the past year or so, we've seen a little growth, 6, 7, 8% growth in nominal growth in house prices in South Africa. The three banks actually agree on that one. The three indices agree for a change. And the question is why? And I've been puzzled with it about it for a long time, and I've now come to the conclusion that the most plausible explanation is that banks have maybe started to relax their credit criteria. The question is, how long will that last? I'm actually glad when they're relaxing it, because that will mean in the end we'll see more housing developments. But at the moment, because there are no new housing developments or very little taking place, it means that on the supply side, prices will stay relatively high for a longer period. Now, okay, I shouldn't express an opinion of whether that's bad or good, but that is my explanation for what's been happening recently. I can't think of any other explanation. At one stage, I was thinking how maybe there's a correlation between the JSE's boom and house prices, but I don't know. I think it's a bit far-fetched.
Thank you. I've got a question from Mayor Duval right at the back. You'll find him. He's the bald-headed guy. It's okay.
Thank you. I've got some interesting stats here related to bonds. If you look at the number of bonds that was granted on a national basis on a quarterly term, for the first term this year, 38,000 bonds were approved. And if you look at the quarter before that, the last one in December, 43,000. So it's quite a significant drop. And this middle term, there was also 43,000 a number of bonds. This is stats from the National Credit Regulator. It's amazing that although there's a sentiment that the market is very buoyant, and it's actually, you speak to agents, they say that the market, there's a shortage of houses, the number of bonds have dropped about by 5,000 bonds less per quarter. So it means that the bonds are lower, and if you look at the market for below 15,000 Rand income, it's actually staggering how few bonds are approved. If you look at the stats from last year, for people that earn less than 15,000 Rand a month, They took up 13 billion rand in one term in unsecured debt and only 1.3 in bonds. So you imagine how many houses they could have built from 13 billion. So what do you think is the impact of the African bank status? Because all the banks will become nervous now again to lend out money because they are picking up some of the risk. So to the panel, what do you think this will impact into the market of banks actually now also become a little bit more nervous to lend out money, particularly on the home loan side?
Well, if I may take that one. First of all, one must be very careful to look at stats like that on a quarter-to-quarter or month-to-month basis because of seasonalities. Could be all sorts of problems. Even the platinum strike would have affected it. Having said that, I wouldn't be surprised if the number is maybe not coming down sharply, but starting to move sideways. I'm talking about the number of mortgage bonds passed. There's anecdotal evidence that your so-called affordable segment, that developers in that segment are struggling to sell, so they become, per force, they're becoming landlords. I don't know, Meyer, whether you can, whether you have any evidence to that effect, but that is the anecdotal evidence I have from one developer, and that's not maybe representative.
No, you'll see that recently Old Mutual created another R1 billion fund to buy property from their own developers, which they have granted fund in terms of a development impact fund. So the developers couldn't sell their properties, so Old Mutual had to bail them kind of out by creating a R1 billion fund to buy these houses and now starting to rent them out. But obviously they have to have an exit strategy, and they're trying to offload 10% of this per annum. And that's where the rent-to-buy concept actually gets in quite well. But the main thing is that a lot of developers moved into holding the stock rather than selling because they struggle, particularly in the market with 75% of your household goes into debt and people are struggling to raise home loans.
You see, that's further evidence that the working class segment of our society is under huge pressure. In fact, Etienne in Johannesburg, what's his surname? Economist of REIM, he made the point.
Etienne
Leroux. He made the point 2 days ago that at the moment, inflation rate for working class people is actually about 8% plus, compared to say the 6% for middle class people, because of things like food prices, which are running at a higher rate. So yes, I'm afraid our society is under huge pressure at the moment, and yeah.
John Robbie, just a question. Signatura has gone very top end. If we look at the distribution of households and household income across South Africa, our median point, half the population lives on a household of 3,500 rand, so we can exclude them out of the market. In 12 million households across the country, it's perhaps that last 1 million of 12 million households in the country that can afford property. At the very bottom end, we have state intervention, RDP houses, a questionable strategy. Can we sustain that? At the top end, you've got Signatura. Where does the man in the street, the guy who's relying on that 15,000, 18,000 rand income level, where does he fit in the property space in South Africa?
Very good question. Look, let me put it this way. There's going to be the affordable housing market, and there's going to be the various stages up to the top end of the market. It's almost impossible for us as developers, certainly in Cape Town, in the Western Cape, to produce anything under, if I'm talking about, let's define it between single residential housing on a plot, as against apartment living. So let's just look at apartments as an example. For us to produce anything under 1.5 million is almost impossible, even if I put my land in at next to nothing. So the cost of building today is running at around, for us, around 15,000 rand a square meter. And you factor that in, 1.5 million is bottom, and I promise you there's very little margin in that. So where is the guy who earns 15,000 rand a month, where is he going to fit into the cycle? He's going to rent. That was my point. He has to rent until he's in a position where he can get into the existing market, where you can go buy houses in the existing suburbs, get his foot in the door, and then scale up. When you look at the affordable housing market, do developers make money? I have not known in all my years, and we've been right through it, where developers are successful in the affordable housing market. And that's why that was our model, that the affordable housing market needs to be cross-subsidized by some type of subsidy from the state in one form or another to be able for it to get and contact. Because once you get the guys in at 500,000-600,000, you start to create the market, because inflation will take it and they'll sell for 800, then 1.2, and off they go into the property cycle. So to answer your question, where does somebody who earns 15,000 to 20,000 rand a month buy at the moment? That's a big, big problem. We can't supply that.
If I may come in on this one, Mr. MC, sorry, I'm monopolizing now.
It's your party. You can cry if you want to.
It supports my view that for a long time now, that we are far too owner-oriented in this country. In Germany, 55% of the population rent. And you can't complain and say they are armhartig, the Germans, you know. The Swiss are 60% of them rent. It's the normal, it's a question of a different culture. In South Africa, I get the impression that to rent, there's some aspersions are leveled at people who rent, as if there's something wrong with them. And I think that is changing through necessity, is changing in our country at the moment, as occupation becomes more and more expensive. Of course, the long-term problem is who want to own a house and rent it out if you can get a return only of 5% net on that house, you know? So that still doesn't necessarily, in the shorter term, solve the problem of the supply side that is lacking at the moment. So by all means, it seems that rentals will also have to rise sometime in the future. At the moment, it's not rising by much, as I showed you, but in the longer run, in order to make new housing construction viable for owner investors, as opposed to owner occupiers, rentals will have to keep on rising, especially if interest rates are going to rise again.
Dolph, we have the phenomenon in this country. Our listed sector is 280 billion rand strong. Of that, of our REITs, perhaps, and it's, if you add it up, and the transactions have come through in the last 2 or 3 years, perhaps only 4 billion of that is in the residential space. How does that fit in a world in the United States where you have the massive REITs, equity residential, monster REIT up there, probably worth more than our whole capitalization of our REIT industry in one company focused in residential? How do you balance that anomaly?
I don't think it's an anomaly. I think it's going to change. What you were saying a moment ago about the proportion of people who are renting going up, that is a trend that's going to accelerate, because in our parents' generation, and I mean ours generically because we're all slightly at different stages, but they had one job and they worked for a lifetime and got the golden watch. And in my generation, you might have 2 or 3 careers, and young people today expect to have 20 different careers. I come across so many people who say they don't even want to own their own home because they're not sure what the economy is doing in their domestic economy. They might go and live in Europe for a while, and if they don't like it there, if the economy doesn't work, they'll try Asia or something. They're far more mobile in their outlook. It comes back to what we were saying before about the world is shrinking and getting smaller and getting more global. So the nature of desire to own your own home, I think, is changing. Turkey, ironically, for a long time had the highest proportion of home ownership, followed by Australia and New Zealand. And that's changing too. So REITs, I think, are going to be dwarfed by crowdfunding. You might say of a personal interest, it's a self-fulfilling prophecy on a desire level. I don't think so. I think this is a real phenomenon. REITs have had their day. They're still good, but the trend we're seeing that's happening, and this came out of the conference we were at in New York, is that there are still a lot of REITs around, but they're already so outdated that as they reach the end of their life expectancy, which generally is about 20 years, in the past, a new REIT would take them over, but now they're just being sold off. And what are they going to be sold into? Either redevelopment work, or they're going to be refurbished, and then a crowd-funded entity is going to take over the assets of what was erstwhile in a REIT. So I know this is sort of a circuitous way of answering the question, but I think we've got this phase shift happening in the world, and it's all good. There's no right or wrong, it's just the way it's happening. At the end of the day, the population of this planet is increasing at an alarming rate. Malthusian theories are still in the fore. So that's one phenomenon that's still occurring. We've got people with changing desires as to where they want to live and how they want to live. The idea of a house, a single-family home in the suburbs with your proverbial quarter-acre lot is diminishing. Yeah. People want, and someone mentioned it before, they want, did you say lock and leave was the expression, or, lock and forget. And I personally like that. I've lived in a condo-style environment for a long time now because I travel so much. I like the idea that when I close the door behind me and that's the only point of entrance, I don't need to worry about anything else. I think that's a trend that's increasing. So it's just a natural evolution of how we live. And I think we can get a bit too hung up on looking at ratios and stats and performance. Go with the flow. Talk with young people. I know that if you want to get wise information, you talk with older folks because they've got the experience. But often old folks are stuck in old ways of thinking. And I learn more from talking with young people and seeing what music they're listening to. Do I always like the music my daughter listens to? No.
I hope not.
No. But it does me good to listen to it and find out what the lyrics are and find out what her friends are talking about and find out what interests them. Because theirs is the way of the future. And if we, even at our stage, want to succeed in this game of real estate, we can't teach the young people what worked for us 20 years ago. We've got to learn what their trends are. And I think that's the secret to staying mentally fit and also being one step ahead of the game.
Yeah, and I know you thought when your daughter was playing you wrecking ball, you was a demolition site, but... Question from the floor?
Yeah, I've got a question.
Thank you.
Hi, good evening, good afternoon, panel. I don't agree with the commentary with regards to the Germans of the world and the European markets that are now showing more signs of or desirous to rent as opposed to ownership in our country. And I think Mr. Rabi alluded to it in his speech of government subsidized first-time home buyers, government employees being subsidized for housing. In all our years, through the apartheid government, blacks were, people in our country were not given the opportunity of land tenure. And that is the separation, as I see it, between those that have today some sort of asset base, something to cling on to, has been taken away from those people. And now we want to continue to suggest that that is a trend. I have a problem with that philosophy.
Okay, I can share some stats with you. I looked it up quite recently. In 1994, because the 1913 Native Land Act precluded black people from buying property in 93% of the country, there were 497,000 records registered in the deeds office in black hands. By 2014, that number had increased to about 2.7 million, but that's of a total of 6 million registered deeds. If you look at where the trends are currently, the fastest growing market segment, 53% of new applications for mortgage bonds are first-time buyers. Of those first-time buyers, single black females are the most exciting category in that space. But I'll share those statistics with you from Lightstone did that research for me. But I think that's the turbo boost in this economy. I think the release of that pent-up demand is what this country's growth is reliant and depending on. But I interject. I'm just asking questions.
And if I can add to that, I take your point. And you made it, you don't need a panel when you've got an MC like this. But I think we've got to distinguish between two phenomena here. One is the trend that we feel ought to be happening for the benefit of the country, and another one is an observable, measurable trend that is actually happening. And the two need not be in alignment necessarily. I agree with you. I'm a big proponent. I've written books on this as to why real estate or property ownership is beneficial to the individual and therefore the country. But that doesn't mean to say that that's what's actually happening. And for the young generation, their reasons not to want real estate might be very valid in their eyes. You know, it's just like we have no control over population growth. There are only 2 countries in the world where their native population, say native in that sense, but where their the population of nationals of that country is shrinking. One is Japan, where they're currently at about 128 million, and they expect to be below 100 million within one generation, not within 100 years, within a generation. And the other one is Germany, where its population is shrinking, and were it not for the importation of what they call guest workers, they would in fact be in decline. And that has major impacts on the real estate market. The other trend that comes into it, and that's sort of just alluding to there are more factors at play here, is the propensity for families to be shrinking. The number of children per couple is going down dramatically, which changes the need for housing. So all these factors come into play, and all we can do really as participants in the market is observe and measure what's going on and see how we adapt our strategies for the benefit of either our shareholders or our funders or ourselves or whomever we're doing this for.
I'm going to take a couple of more questions from the floor, and then I'm going to get the panelists to give their concluding comments. And me and Dad are going to leave and sort ourselves out. Hey, Dad. Couple of questions from the floor.
I'd like to just answer that question on the wealth effect as well. I think one of the things that's held most people back is 2 things. The first one is education. So it's very easy for me to buy a house because my father bought a house, and when I was terrified, I went to my father and he helped me buy the house, etc., etc. So education is now accessible to everyone. You don't have to go to Harvard anymore. You can go free on YouTube or TED and literally find out the same information. And I think that, you know, people all over the world will watch videos like on TED about the wealth effect and the impact that property has on people's wealth, and they will want to partake in it. The second thing has always been the gap between how much money I've got and whether I can invest or not. And yes, there's countries like Australia where the government gives you a 5% deposit, etc. But in general, people just don't have the ability. And as you know, technology improves, the education will rise and the ability, the barrier to entry will drop. And that, when those 2 graphs intersect, that's when we'll see. And that's really what we were talking about with that Project W Wealth. You don't have to own an entire building to benefit. You can own the door handle.
The democracy of capital. Sure. Sure. You've paid thousands, giving you one more chance to ask the experts a question or 2, or 3 or 13. Okay, I'm going to have closing comments. I'm going to go with Neil.
Yeah, just extending a little bit on the comments of investing versus renting. I think Scott touched on it. I mean, I'm very passionate about the whole education process for investors. And it is so accessible anywhere, you know, to get the information. Once you start getting your first little bit of success, it almost catches you like a bug. Because you pretty much, you know, realize, and I went through this sort of transformation myself. I made money through accident, through buying and selling a number of properties over a number of years. And then, of course, when the financial crisis came along, I didn't know what happened too. There were harsh lessons learned there too. So, but the whole thing is that we're learning all the time, and I think that's the most important. Just to touch a little bit again on this whole sort of rental market. The new market, I mean, I touched on it today, was, you know, it's a very strong technology-based market. They tend to be on the move, and they like to move from place to place quite a lot, and they tend to stay in the high transportation nodes. And so it's a very different type of renter that is around today. They're more mobile, they're on the move, and they want a bit of diversity in their life. They don't want to be stuck in one place for too long. So the whole concept of investment for them is very different. For investors, that's a good thing because you hopefully are getting a good tenant, hopefully. Just from that sort of perspective, I think if somebody's not sure, you know, get into the market. There's different ways that you can invest. I think, you know, like John's whole version where they take a property, okay, he's in a very particular sector and they change the whole look of the property. I mean, there's also ways that you can convert from residential to commercial. In fact, Erwin, your offices are in a residential node which has been converted to. So there's different ways that that value can get out of property. So absolutely, the education thing is big, but I think once a bug catches you, you get some success, and and I think that is the thing. Get that first little bit of success, and I think it happened to you, John, and then the next one follows from there on forward.
Sure. Over to Dr. Dolf de Roos.
I agree with that, Neil. And again, I think one of the benefits of coming to events like this is you get different points of view. If we were all in agreement with each other, if we never had questions that said, and I respect the fact that you said, I disagree with this. If we were all in alignment, we'd be redundant to each other. We'd all be sitting, listening, and nodding our heads. So it's good to have different points of view. They say the mind is like a parachute. It works best when open. And the challenge is, many people think they've got an open mind when it's merely vacant. So the fact that you're here shows that you're willing to open your mind to possibilities. So thank you very much.
Maybe. Scott Picken.
No, thanks for a wonderful day. I've learned a hell of a lot. And just from the last thing I would say is that if I'd said to you 20 years ago that you would do all your business by email and on your mobile phone, you would have looked at me like I was mad. Today, if I said to you, you're not allowed to check your email for 6 months and I'm taking away your phone for 24 hours, you would think your life was about to come to an end. I can guarantee you that crowdfunding will have the same impact on your property career in the next 10 years. And just from a perspective of trust, I deposited 18,000 Rand in Martin's bank account at 12 o'clock today. Never met Martin before. And at 3 o'clock, he dropped off my 12 tickets to the rugby game at Brendan, my business partner's wife's house, in 4 hours. I've got the picture if anyone wants to check it out. That is the literally right happening now, social proof. And if you just think of what can happen with tickets, imagine what will happen in the investment world.
Before we get to Dad?
We have to sort out the Ebola question, please, my brother. Can we go outside and have a discussion? I like big fat cows.
Look, I helped Kulubuse out with his situation, so
it's asking about the property market, about ownership and rental. I think let me just comment on that. We have inflation. Inflation, and I think Herman will understand that when he mentioned that about the institutions, where institutions just held on to the property and didn't want to sell. They weren't geniuses, but that inflation, with rentals going up every year 10%, created inherent value. Now, inflation is a quick increase in value of house prices. If you're buying in the right area, and you're not buying out there you're buying in the right areas, you are going to have a 10% inflation in your prices, and your property is a good investment in this country. We've proved it over the years. We're continuing to prove it. It's not always going to, and if you take prices are going to come down, they're not going to come down in the really established areas where you've got transportation nodes, the My City bus service around this country, the VIA service in Johannesburg. You're going to have value in your property. No question, and it is your single biggest assets, and people aspire to have their own home. So, I understand the renting philosophy. I understand what everyone says about Germany. He's quite right, except the percentage is 75% of Germans rent. But we're going to have that happen. It's going to be a combination. As Dolf says, there's going to be markets within markets. But they cannot take away that a house is a person's single biggest asset and is the leverage going forward to create wealth for a family, individual, or single. Thank you very much. Can we leave now immediately?
No. My single biggest asset is the marriage certificate I'm going to have with your daughter for you to be my father-in-law. To end it off,
Yeah. Well, I think the most important thing about property is that it's a forced way of saving by owning it. Its performance is not the best. We all know that. Everybody acknowledges that. So equity, if you were to consistently invest in equity, chances are you will do much better. Unless you are going to argue that with property, the big advantage of property is that you could gain. But given where we are now in the cycle, gearing is not all that lucrative. That's the first point I would like to make. It's a forced way of saving. And the second important thing is that, and we're now here more on social grounds, I think many politicians tend to forget that it's not property. Wealth doesn't start with property. It starts with income. Because income allows you to finance property. and then to get capital growth through that. So if you want to grow income, as my colleague has said, then of course you need education first. Everything starts with education, and that's where this country is falling flat.
Thank you. Ladies and gentlemen, you've invested a day with us. You've been here at the Ruda REIM Investment Conference. The Ruda products are up available on the screen. Scott and his team in Wealth Migrate, if you want to have the conversation about going offshore, are standing outside ready and waiting. John Robb, if you want to buy a 1.7 million rand property, I will only charge you 7.5%. We're family now, so I'll negotiate my rate down. If you want to pick up one of Dolph's books, there are lovely young ladies waiting there to take your cash. It has been a joy. I love and understand real estate, and I think about it in the middle of the night. And it's been a pleasure to stand up with you and some of the great minds that we've operated here today. I'd love to continue the conversation. I'm on Facebook, I'm on Twitter. That's pretty much it. My name is Kura Chiota, and it's been an absolute joy and pleasure being with you. So until next time on Ask the Property Experts, from me and the studio and my wonderful team here, goodbye.